With a new screener laying out a list of stocks about to break out, according to the bullish Golden Cross chart formation. These are names where the 50-day moving average is approaching the 200-day moving average and is within 3%. And the 50-day moving average has not been on the other side of the 200-day moving average over the past month. Got that? Okay. Our support technician today is Carter Worth, founder and CEO of Worth Charting. I set it up for you, Carter. Take it away.
You sure did, Tyler. So if you think about the circumstance, before we look at the charts of a golden cross, definitionally it's something that's been in a downtrend and where current price over the past several weeks is so aggressive that it's allowing for a short-term moving average, a 50-day, to move above a longer-term moving average. But let's look at the charts together and try to figure it out. What you have here is a comparative chart, and what it is three stocks: LabCorp, which has nothing to do with BlackRock, which has nothing to do with Best Buy, a retailer, a financial, and a medical company. And yet you can see they're quite correlated. What's leading the way there on the top is the S&P. So let's drill down here a bit and look at the year-to-date chart. And you will see, if you look at this next iteration, what we're talking about. So these are laggards, definitionally, yes, that have not kept up with the market. And you can see the spread is quite wide. But that is the opportunity, which is to say playing for stocks that have not kept up with the market. And so we'll look at them individually, and you'll see, I think, what is an important circumstance in each case. So the first one here, this is LH. And the way I would draw the lines is as follows. We have a well-defined downtrend line, and we have something of a head and shoulders bottom. So that warrants a nice arrow up and to the right. And we're going to look at each of these in turn, and they have the same exact setup. But you see here LH, right, making the turn. We might look at the other two just to make a point. Take a look here at BlackRock, and I'll clear, but you almost don't have to clear it. Watch. Draw the lines again. Here's the head and shoulders bottom, and that warrants the up arrow. And then finally, let's do a third, and then we can discuss it. If we were to look at, of course, the last stock, what is the circumstance? It's the exact same thing. A well-defined downtrend. Stock strength, recent strength, is allowing a move above that downtrend, and of course, the head and shoulders bottom, which again warrants the arrow. So my thinking here is that these are stocks that have an opportunity because what? They've lagged, but on a short-term basis, they are handily outperforming the markets. That's a perfect 1-2 setup. A precondition of underperformance and now nascent, very developmental action of late that is so good that it's outperformance here and now.
So as I look at what you just pointed out there very, very clearly, I see those double bottoms or the head and shoulders bottoms, and then I see a rise back. But it almost suggests that that upward trend presages another downtrend. Well,
if the sequence was intact, the downtrend sequence, that would be the case. Meaning, if we hadn't made those triple bottoms, right, which is to say we were coming from a new low and then rallying, yes. But the sequence is different now. We haven't made new lows for typically 6 months, and that's what a bottoming formation is. So this strength, this current leg that you're referring to, is confirmation that those lows are quite good.
Those lows are lower than it's likely to go on any pullback.
That's right. That's exactly as you said.
Carter, as always, great to see you, my friend.
Thank you.
I think I'm going to see you Friday night on Fast Money.